Imagine turning just $100 into real wealth while you're still in your 20s. Gen Z is starting to invest earlier than any generation before us, and 2026 is honestly one of the best times to begin. Fractional shares, zero commission apps, AI-powered insights, and powerful compound interest are all working in your favor. In this video, I'll walk you through exactly how to start investing with $100 or even less, step by step, with zero experience required. I'll share the best apps for beginners in 2026, a simple beginner portfolio, realistic growth projections, common mistakes to avoid, and exactly what to do next. So if you've been wanting to get started but felt overwhelmed or broke, this is for you. Let's dive in. First, why should Gen Z even bother investing right now? The numbers are actually pretty motivating. Recent surveys show that around 42% of Gen Z adults are ready to start investing in 2026. Many of you are more optimistic about the markets than older generations, with a big interest in AI, tech, and long-term wealth building. Plus, a third of Gen Z started investing by early adulthood, double the rate of Millennials at the same age. The power of compound interest is honestly insane. When you invest early, your money works harder for you over decades. For example, if you put in $100 right now and add just $100 every month at an average 8% annual return, over 40 years, that could grow to well over $300,000. Start at 22 instead of 32, and the difference is massive. Time is your biggest advantage as a Gen Z investor. We're also dealing with high rent, student loans, inflation, and side hustles. Investing helps you build real financial freedom instead of just surviving paycheck to paycheck. And in 2026, the tools are better than ever. Super user-friendly apps, automatic investing options, and low barriers that make it accessible even if you're starting with pocket change. Before you put any money into the market, get your foundations right. First, try to build a small emergency fund. Even $500 to $1,000 in a high-yield savings account, so you're not forced to sell investments during an emergency. Second, focus on paying off any high-interest debt like credit cards with rates over 10 or 12%. That's like earning a guaranteed return by avoiding interest. And third, remember this mindset shift. Consistency beats perfection. Starting small every month is way better than waiting for the perfect time or a big lump sum that never comes. Okay, here's the exact step-by-step process to start with. $100 in 2026. Step 1. Choose the right app. For beginners right now, here are the top options. Fidelity and Charles Schwab stand out as the best overall. They have zero minimum deposits, excellent educational tools, fractional shares, and top-tier research features. You basically won't outgrow them. Robinhood is super popular for its clean, beginner-friendly interface and easy mobile experience. It's great if you want something that feels modern and simple. Acorns is perfect for true micro-investing. It rounds up your everyday purchases to the nearest dollar and automatically invests the spare change. Ideal if you only have $20 and $50 to start. Other strong choices include SoFi for all-in-one banking and investing, Public for social features and diversification tools, and M1 Finance if you like customizing your portfolio. All of these offer commission-free trades on stocks and ETFs in 2026. Step 2. Open the account. It literally takes 5 to 10 minutes. Download the app, sign up with your info, verify your identity with a quick photo or ID upload, and link your bank account. If you're under 18, set up a custodial account with a parent or guardian. Then deposit your starting $100, or whatever you have. Step 3. Decide what to actually invest in. For most Gen Z beginners, keep it simple and boring in a good way. put 80 to 100% into low-cost index ETFs. Great core choices include VTI or SPY for broad US market exposure and a bit of VXUS for international stocks. If you want some growth tilt toward tech and AI, which many Gen Z are excited about, add a small percentage to QQQ. Why this approach? It's highly diversified, has historically beaten most active stock pickers over the long term, and requires almost zero daily maintenance. If you want it completely hands-off, go with a Robo advisor like Betterment or Wealthfront. They automatically build, balance, and manage a diversified portfolio based on your goals. Also, once you have earned income and qualify, open a Roth IRA inside these apps. Contributions grow tax-free, and qualified withdrawals in retirement are tax-free too. One of the smartest moves for young investors. Step 4. Automate everything so you don't forget. Set up recurring transfers, even $50 or $100 on payday. Turn on roundup features where available. The key is making it automatic so your future self thanks you. Now, let's look at some real-world numbers. If you invest that initial $100 and add $100 monthly at 8% average return, here's what happens. After 10 years, you'd have around $18,000, $20,000. After 20 years, over $50,000. After 30-40 years, it snowballs into hundreds of thousands. That's the magic. Small, consistent actions compound into freedom. Of course, investing isn't risk-free. Markets go down sometimes 20-30% or more in bad years. The key is to not panic and sell at the bottom. Stay invested, keep adding money on sale, and focus on the long game. Only invest money you won't need in the next 3 to 5 years. Diversify, avoid putting everything in one stock or crypto hype, and treat this as a marathon, not a sprint. Common mistakes I see Gen Z making: chasing viral stocks or crypto without research, investing money needed for rent or emergencies, and trying to time the market. Instead, focus on time in the market over timing the market. Also, many overlook values-based investing. Apps like Public let you align your money with causes you care about, which is important for a lot of us. Quick FAQ: what if the market crashes right after I invest? That's normal. Keep contributing. Should I pick individual stocks? Not as a beginner. Stick to ETFs. How much should I invest? Start with whatever you can afford consistently. So here's your action step right now. Open one of those apps this week and start with whatever amount you can, even if it's just $20 or $50. The most important thing is to actually get started. If this video helped you understand how to get started, do me a quick favor. Smash that like button and subscribe with notifications turned on. It really helps the channel and lets me keep making more practical money guides for Gen Z like you. Drop a comment below and tell me, what's been holding you back from investing? Is it fear of losing money, confusion about apps, or something else? I read every comment, and I'll reply to as many as I can. In the next video, we're covering the best side hustles for Gen Z in 2026 that can actually help you fund your investing habit. Thanks for watching. You've got this. Start small, stay consistent, and let time do the heavy lifting. I'll see you in the next one.